Well, the market just had one of those days that makes you feel great, but maybe don't pop the champagne just yet. Today, we are going to break down why this huge rally might actually be a trap, and more importantly, what it means for your portfolio strategy. So let's dive right in. So, yeah, the market absolutely soared, but there's a serious catch hiding just below the surface. The real question for all of us is, how do we navigate this uncertainty and protect our investments? And the key, you'll see, is understanding the two very, very different futures the market is staring down right now. And what a rally it was, right? I mean, the S&P 500 jumped more than 1%. The Nasdaq and the Dow, even bigger gains. If you just looked at the headlines, you'd think it was a fantastic, all-clear day for stocks. But this is where the story gets really interesting and a little complicated. Take a look at the VIX, the market's fear gauge. It's still hovering above 26. Now, a VIX that high tells you there is a ton of anxiety and risk still baked into the market. This is absolutely not a safe market. It's a super tense one. And it's that disconnect, that gap between the big rally and the high fear level, that's what we really need to unpack. So that brings us to the first big question. Why the sudden jump? What on earth was the real trigger behind this massive surge? And here is the absolute crucial point. This rally was not caused by some fundamental shift in the economy. No siree. It was driven by, and I quote, investors who were looking for a reason to buy finally moving. Basically, you had all this cash just sitting on the sidelines, anxiously waiting for any piece of good news as an excuse to jump back into the game. And that excuse? It came in the form of what you could call a thawing switch. President Trump's announcement, that 5-day delay in military action against Iran's energy infrastructure, that was the switch. Now, it didn't solve the underlying problem, not at all, but it was just enough to unfreeze a market that had been completely paralyzed by geopolitical fear for weeks. And this slide, wow, it just brilliantly shows you the market's reaction. WTI crude oil prices absolutely plummeted, down nearly 10%. Think about that. This wasn't because the supply problem was suddenly fixed. No, it was based purely on the hope, the prayer, really, that diplomatic talks might cool things down. This massive drop in oil prices took away a major headache for the market, but it's a move based on optimism, not reality. Not yet, anyway. But beneath that optimistic, shiny surface, the risks aren't just still there, they are absolutely enormous. Okay, this slide really gets to the core of the problem. You've got President Trump on one side calling the talks productive, then on the other side, you have Iran's foreign ministry flat out denying that any discussions are even happening. This isn't just a simple disagreement on phrasing, it's a total disconnect. It just goes to show you how unbelievably fragile this whole situation is. And that right there is the key takeaway. This 5-day window, it is not an agreement. It's not a resolution. It is, at best, a temporary pause button being hit. The fundamental conflict is still completely unresolved, which means the market's big party is happening on some very, very shaky ground. So where do we go from here? Well, the market is basically balanced on a knife's edge, facing two starkly different potential futures. Okay, let's talk scenario A. This is the happy path, right? If real, actual negotiations start to make progress, we should expect to see oil prices keep falling. That would probably pour fuel on a rally in sectors like tech and financials, pushing the whole market up. You could see the S&P 500 testing new highs, and the VIX would finally drop below 20, which would signal a real return of confidence. But then there's scenario B. This is the opposite, and frankly, it's pretty dangerous. If the talks completely fall apart and military action is back on the table, oil could easily rocket past $100 a barrel. That would immediately bring back all those old fears of inflation and potential rate hikes, sending the VIX soaring above 35. And in that world, you'd see money fleeing from growth stocks and hiding out in safer, defensive investments. So, knowing these two potential futures, how in the world are you supposed to position your portfolio right now? Let's get into the actionable strategy, the nuts and bolts. First up, what you should be doing. Number 1, use this rally. It's a gift. It's an opportunity to look at your portfolio and maybe trim any positions that have gotten a little too big. Rebalance. Number 2, even though oil prices tanked, think seriously about holding on to an energy fund, something like XLE, as a hedge against things going sideways. And number 3, be super cautious ahead of that PCE inflation data release. That's a huge number. The Fed watches like a hawk. Now, just as important is what not to do. Do not, I repeat, Do not chase this rally out of FOMO, that fear of missing out. Don't just blindly buy into falling high-risk stocks to average down, and whatever you do, do not make the mistake of thinking this whole around situation is resolved. The risk is still very, very real. All right, to wrap things up, let's put some dates on the calendar. These are the specific events that are going to give us clues about which of these two scenarios is actually playing out. You're going to want to circle these dates. March 28th is a massive day, a real doubleheader. That's the end of that 5-day grace period with Iran, and it's when we get that all-important PCE inflation report. Then, a little later on April 4th, we get the U.S. jobs report. Any one of these could be a major turning point that sends the market flying in one direction or the other. And that leaves us with one final crucial question you have to ask yourself. Looking at your own investments right now, today, are you prepared for the optimism of scenario A, or are you braced for the potential chaos of scenario B? Or are you properly balanced for both? Your answer to that question is going to define your entire strategy in the critical weeks ahead.